All right, we are live. Welcome back to the Prospero.Ai stock market live stream. Hope everybody had a great weekend. We have a lot of good topics to get into. We are going to be reacting to the Tesla event that everybody was watching and waiting for months, and the stock sold off after it. Hopefully, if you were a viewer of the stream, that prepared you well for how it went down. But now, after the event is behind us, and after we've gotten the stock reaction, how do we feel about Tesla moving forward from it? So we're going to get all into all those details for Tesla stock. And before that, actually, we're going to talk about the strength that we're seeing in the overall markets. The QQQ and the SPY are both up strong today. We've had high net option sentiment readings for both for some time now. I'm wondering, are we in a Goldilocks period where the data and the seasonal trends are just going to keep pushing us higher and the market will melt up through the year end? Obviously, we have a major event for the market and the world in about 30 days from now, the election. So as long as that goes smoothly, can we expect the market to continue higher? So we'll discuss all of those details as well. Next, we have um, a legend to discuss making big moves. Warren Buffett is now a third. Can you guys actually comment right now if you can hear me? Because something's going on with my earbuds today. So I just want to make sure that you guys can hear me loud and clearly. So that'd be helpful. I see we have 30 people in the stream. Thanks for tuning in and joining quickly. I don't know what's going on with my earbuds. They seem to be connecting to my phone, which the Bluetooth is off. But all right, good, Mario. Thank you, Mario, for answering me. So I'll continue. So Warren Buffett now owns a third of Sirius XM stock, which is very interesting because it seems to be such an ugly investment of a company where the tech is just being slowly eroded and fading away. But is this a sign of him losing his touch, or is he going to be proven right in the long term? We'll discuss those details. Next, NVIDIA breaking out to a new all-time high. It seemed like NVIDIA and a lot of the semiconductor names, a lot of the AI related companies were kind of consolidating for a little while now, maybe since the last earnings season, to be honest. So a few months. But now with them showing some newfound strength, are we setting up for a new wave of gains in the AI space? NVIDIA, I know we've mentioned on the stream Broadcom, and all of the other semi names and AI related companies, the big mega cap tech companies. So um, it'll be interesting to see how it plays out to year end with the strong move we're seeing today. And then obviously, with the market being up so much today, there's a lot of stocks making higher moves. But one of them in particular, which is up over 9% right now, is SoFi, which has been beaten down for a long time. They signed a new deal. I'll give you the details on that. It is multiple billions of dollars. But it seems like the the businesses that have exposure to loaning out money might be some of the new darlings or diamonds in the rough, you could call them. After the SoFi news, so we'll talk about some of them. I think we also want to bring up Upstart. We can talk about that. Upstart is another one that's up bigly today, so we'll discuss all of those names. And then Bitcoin is up also today. It's kind of tough to find a stock that's down today. Honestly, the market's so strong, but Bitcoin is up. We want to give an update on the crypto space, all the stocks that we discuss when it comes to that sector of the market. I'm thinking Coinbase, MSTR, CLSK. So we'll talk about the crypto area of the market, if it's looking like a good investment. Obviously, we've talked before about it, how it's one of the only things that's probably not going to be affected negatively, no matter which way the election goes, with all of the people supporting and behind crypto now, the voting block that is. So it'll be interesting to see what George thinks about crypto after all of the areas of the market seem to be showing so much strength recently. And then last but not least, if you were at our stream, thank you for everybody who answered me when I asked if you could hear me. Robbie, Jonathan, Chris, Mario. Um, but last but not least, before we get into the model portfolio update at the very end of the stream, if you were on our stream last Wednesday, we never got to this topic, but I did have it back then, so we'll get to it today, hopefully. Elliott wave theory is a very interesting type of technical analysis, and I want to ask George if it's useful for investors, what his opinion on it is, how accurate he thinks it is, and just overall, what should the people who watch the stream, myself and you guys, know about Elliott wave theory? Should we dive deeply into that? And that's going to be do it on our topics that I have for today. As always, feel free to comment any stocks, any topics, anything related to business, AI, finance that you want to hear mentioned on the stream today. We'll be sure to get to them. But now I want to take a look at the QQQ and SPY net option sentiment before George gets in here. So we'll do that, obviously, like I said, and like you guys probably know, the markets are all higher so far today. QQQ and SPY are about the same, up about 0.5%. Dow Jones slightly positive at 0.13%, and IWM 0.33%. So all looking good so far, but let's take a look in the Prospero app and see how the readings are. So we have QQQ first of all. By the way, did you guys notice that the Prospero app updated? If you haven't noticed it when you've opened the app today or last week, open it up right now, and then when you click on whatever stock you want to click on, there's a new animation where the charts load in, which is pretty cool. A new timestamp at the top that shows you the last time the app updated. Right now it says 11:07 a.m. So yeah, it's pretty cool. A lot of progress happening inside of the Prospero app. But I have QQQ open now, and net option sentiment is reading at 62. So firmly in the bullish level. That's honestly where it's peaked recently, about the low 60s. Hello, George. Welcome to the stream. But then I want to also look at SPY as we get going here. So the SPY continues to be lower than the QQQ at 47, but still not so low that it's bearish, but interesting to see that it's lagging the QQQ as it has done in recent weeks. And George, where I want to start for our viewers today is just kind of an overview of the market. It's so awesome to see the strength. I mean, we've been discussing the bearish scenarios, the volatility fears, the election weighing on the market, but it seems like no matter what happens this year, the strength and the continuation higher in the markets has just been so powerful. Obviously, we just looked at QQQ and SPY and option sentiment. They're both still strong. Are we in a Goldilocks period right now of data and, turning the calendar over into a seasonally strong period after we get past September and October? So is this what Goldilocks feels like?
I just feel like it's one of those things where we're approaching earnings season again. And I think we expect earnings to be good, right? So I really think it's just something that we continue to see, which is that the market ultimately has to react to good numbers. I think there's a lot of bullishness in here. And then, I think when we're kind of reminded of potential bearish events, there's a reaction to that. But I think overall, the market has to respect things. And I think one of the things that it always respects are earnings and earnings beats. And we've talked about this. And JPM kicked it off with a good beat. I think the market is realizing that as much as there might be macro bear concerns, earnings are coming again. There's no reason to expect, when you see like 80% of the companies beating last quarter, right? There's no reason to expect that to trail off, right? we don't really, we're starting to see some macro concerns in things that are, there's a little more nervousness around them, like consumer cyclical, like consumer defensive. But, otherwise, when you look at a lot of the other sectors, there's no reason to expect that there aren't going to be good earnings. And as as an institution, and a retail trader, but certainly institutions build this in, they have to understand that if companies are going to beat, that's going to be a good thing, and that the stocks are going to react well to that, and they have to be prepared, get out ahead of that.
So investors and people in the stock market have wondered for so long if the Fed could manufacture a soft landing, and it seems like it's been a talking point. And a lot of people say like it's so rare, it would be so difficult to do. Is it still a wonder, or has it been done? Have we gone through a soft landing where you know we haven't gone through technically a recession, I guess?
Well, I think we have to see if it's done, right? There's a lot of story left to play, right? And I think some of the story is the election that, could obviously have some adverse effects on the market, right? So we've got to look at that. But yeah, I think otherwise, um, it is like barring some, and there could be events, right? There could be geopolitical events. There's definitely some, interesting things with China. There's interesting things in the Middle East, and I say interesting is like they could potentially affect the market, right? So I think that's what we're heading towards, right? But it's like that's why we have such a volatile market. I think we are heading towards a soft landing, but also the list of things that could go wrong and derail that is not a short list, right? So I think that there has been a good setup for that, but we've got to, as Powell says, see the data.
Yeah, it's been so awesome to watch the economy hold up for so long and the data coming strong. So we'll continue to keep our eyes on that. But one stock that I wanted to turn to at the beginning of the stream, because it's one we talk about so often. And last week we were covering the Tesla robo-taxi event that the market had been waiting for so long. We kind of highlighted some of the risks that could possibly play out, which seem to have come to fruition after the stock reacted pretty negatively towards what was released at the event. What is your personal reaction to the event, the tech that they showcased, and then after the stock reacted negatively, what should Tesla shareholders, how should they feel? What's the next move in the stock going forward from here?
I mean, it's pretty hard, right? I think it's hard to pull off something like what they were trying to do, right? I think it's going to be really hard. They do a good job on hype, and it's hard to blow people away with this kind of stuff, right? Because I think it's kind of the mundane that they can't achieve yet. That is what we need to see, right? We need to see these things on the road and working, right? Anything short of that is kind of going to be underwhelming, right? It's a car that it's a car that drives itself, right? And seeing that in a showroom, there was talk of actually how like their robot was like the Tesla bot was like remote controlled, and like that's not a very good look. But yeah, I think a lot of this is going to be hype until it's actually on the road, right? And we kind of were concerned. We obviously called that before, and we were worried about the volatility, and we definitely saw downside breakout heading up, which is like concerning when you start to see people, increasing their long-term bets against something leading into an event. But yeah, I think it's going to be very hard for them to do anything impressive until we see until we actually see them on the road. And I think and I think the tough thing with Tesla, and we actually got out of it, we wrote it a few times, we got out of it a few weeks ago. The tough thing with it is it's just like, it's going to have these big swings, right? Where it gets a lot of momentum and people are just going to keep piling on, and the valuations aren't going to really make sense. But we talk about it like we do see value in momentum. We do see value in social sentiment, but there's a balance, right? And I think that's the problem. When you're valuing momentum, the stock can go in the opposite direction very quickly when that momentum shifts. And that's kind of what always makes us concerned about Tesla and going into an event like this, where again, it's very hard to prove that they can go on the road and they can work on the road and that they're going to have wide adoption before we really see that.
So I think an interesting question, because we've talked about how Elon Musk has aligned himself with one political party so much. An interesting thought experiment to do is, what's even more important for Tesla stock right now? Is it their upcoming earnings, or is it the result of the election?
Oh, I think it's definitely the election. Like, I think, earnings have been underwhelming for them, right? And I think even if they get back on track and they beat, it's not insignificant that they've already had some disappointing quarters, right? In a growth story like Tesla, you don't really want to see any disappointing quarters, right? Especially the way it's valued. I'd say, above its earnings, like it is basically, its EPS is bigger, like forward EPS, sorry, its forward PE is bigger than Nvidia's, right? Which is that's why it's like a tough valuation for me to wrap my head around. It's like when you compare their quarters, it's night and day. Nvidia is killing it today. It's expected to continue to kill it, right? So it becomes a question of like, okay, how much of this is momentum? And we see value to momentum, but no, like if Trump wins, it's going to be huge for Tesla. And we talk about it. It's like, I don't, we basically say, we always, and I think we're going to have a Buffett story where like, I think Musk has earned the right of at least some benefit of the doubt. But I would also say it's just highly risky and something we've never really seen to align yourself so much with one political party. But, it's a risk reward, right? The payoff is definitely there if Trump wins, and it's going to be very good for Tesla stock. And I think it's going to be good for Tesla, the company, in full self-driving, but it's a big bet.
I did find it kind of funny. I was looking at analyst price targets for Tesla, and no matter how bearish you can be on the stock, there's some analysts out there that are more bearish, because like I was seeing some that are like below 50, which is just insane to think about. I don't know. Do you think, like, even in the worst case scenario, could you ever foresee Tesla being like that low ever again? Like, why do
Well,
some analysts have such low targets?
I think you have to understand how analysts work, right? And analysts work, a lot of them are building like DCF models, right? And if you're looking at cash flows, even with cash flows with like reasonable assumptions built on them, it shouldn't be valued where it is. And they're not wrong that if you're running some conservative growth assumptions, right, you can't justify this stock price, right? But when you look at retail investors, when you look at even growth oriented institutions, they're not doing like reasonable growth multiples, right? And it's not really their job to. It's the job of analysts to do that and to kind of like go in and, do straight modeling work to justify their valuations. And that's why we always say, like, some people hate analysts, and we have analyst data that are embedded in our upside and downside ratings, right? Because you need those data points, right? You need to have all the data points. Analysts tend to run more conservative, but it's good, right? While, look at the contrast, right? We like Meta. We've loved Meta for a long time since it was trading way lower. Analysts continue pretty uniformly to put valuations on that stock above where it's trading, or even the conservative ones are pretty close to where it's trading. And that's because you can justify it from a value perspective. And that's why you just have to have different kinds of, if you really believe in Tesla, if you think, Trump's going to win the election, and you think full self-driving is going to roll out, right? And you're sure about that, right? That's going to be a big win if you're right. But when analysts are just looking at straight numbers, it's not really sound modeling principles to forecast that happening. So that's like the divergence. And you can never, like, analysts are never going to make forecasts about like someone winning an election and full self-driving rolling out, building out. I mean, I'm sure there's some that might have that baked into kind of higher estimates of Tesla, but you're not going to find analysts uniformly doing that. And that's really just the difference.
Something I've wondered before is, with the ease of access of information of social media and technology today, and maybe the ability to predict the future better, do you think that's led to some of the valuation increases that we've seen in tech companies today? Um, or is there a precedent for that in history? I feel like the everybody's able to get access to probably the best information out there, so people are willing to make bets on a company like Tesla longer term than maybe they would, in the 1950s or 60s.
So I think it's a good point, and I think you're talking about like a few things at play, right? One of the things that like Prospero tries to preach, and I always say to retail investors, is I think you have to straddle the line. There's some people that say momentum's not a trade or social sentiment's not a trade or an investment, and I disagree. I think there's value to that, right? But if you think about historically, and one of the reasons I push that, I think is historically, you kind of have value investing ruling the market, right? And ruling valuations. And basically, like even retail investors to other retail investors just be like, well, I like the ones that are in the know, be like, oh, I don't know if we can justify that multiple. You're like, so basically, you had like the value investing community pushing their reasonable multiples on other people, right? Now I'd say it's the reverse, right? Of like what we're talking about with like reasonable multiples analysts, right? Now I think it's retail, pushing hopeful valuations on the market and institutions accepting that because they don't want to miss the boat on like these Tesla runs, these Nvidia runs, these things that are like retail driven, but also institutions acknowledging that if retail is going to push these valuations, right, that everyone can kind of benefit from them. And institutions love that, right? The smart ones, because they love that they can see when these trends are developing, get in on the ground floor as it's being pushed up above reasonable multiples, and then also make money on the way down. And there's institutions that are just very, very good at that and happy to live in this like more modern world where that happens. But it's the market evolving, and it's the market evolving beyond this idea of what reasonable multiples are. And for a while, like basically it was determined that these kinds of like momentum social sentiment things were unreasonable. They didn't happen in the market. I mean, social sentiment didn't really even exist when a lot of this was happening. So yeah, it's I think that's the main change. And we always love to tell a story about Warren Buffett's biggest regret. And when I first got into value investing, like this makes this point in a different way. Value investing used to say you do not invest in tech. No one invested in tech in value investing when I first got in 20 years ago. And it said, because you don't know how much of the growth is built into the price, right? And Warren Buffett will tell you that one of his biggest regrets was not investing in Amazon. Bezos approached him to get like basically like a discount. And Buffett was like, this doesn't feel like a discount to me. I can't justify the growth multiples you're pitching me on this stock to derive this valuation, right? And he admits he was wrong about that, right? But at that time, that was the prevailing wisdom, right? That, you couldn't invest in tech stocks if you were a reasonable value investor because you didn't really know the multiples. And now, like every value investor, or almost everyone, will invest in tech, right? So there is this big change, right, that has occurred. And I think that's a really important part of it.
And speaking of Buffett, we've brought him up a few times. I wanted to mention him today because I saw a stat that kind of shocked me. He, Warren Buffett, and Berkshire Hathaway now own a third of all Sirius XM stock. It seems like such an ugly investment to me. With a form of entertainment and technology that seems like it's kind of slowly eroding away and on the back doorstep. But I'm wondering, obviously Buffett's track record and history, uh, you got to believe in him. So is this him losing his touch as he gets older and maybe doesn't know the state of current technology, or will he be proven right in the long term and once again prevail?
Well, we've just alluded to this, and like I think obviously certain people deserve the benefit of the doubt. Like I'd say Buffett more than anyone. And so, on the surface, this this could be a few things, right? This could be kind of what you would call a traditional value investment, where he says people don't realize that XM radio can cash flow on an ongoing basis in a way that's going to make me money. And I'm looking at free cash flow and I'm saying, look, maybe the business isn't going to be around for another 50 years, but it will be for 10. And for that 10, I think the market is undervaluing the cash that comes off this business, right? That's traditional value investing in a nutshell. And XM on the surface is something could easily be like undervalued based on those parameters, right? The other thing that you never know with someone like Buffett is maybe he has different plans for some of the assets, right? Like these satellites, for example. Like if we have all these like satellite cell phone company, like ASTS is one of them. Like you don't know if he has other plans for the satellite assets or the broadcasting infrastructure or whatever, right? So I think those are the two things. But like, yeah, on the surface, it's a little weird. But history is littered with um, Buffett Buffett people being skeptical of him and him having different plans for something. Like the big example that I always say is Geico, right? And people didn't necessarily know why he bought an insurance company when it happened, but he started investing the float. So we've talked about this. The float is basically like the advances that people pay in their premiums before you have to pay out. And that's one of the things that's made Berkshire Hathaway, right? So you don't necessarily know what his plan is, but he's definitely earned the right to have that. But like, it's one of those things on the surface. Like, I think people's instincts are correct. You're just like, I don't understand. This doesn't seem like a great investment in a company that might not be around forever, but you always have to look at it from that angle too.
And I did check out their PE, and I think it's below 10, like about 8. So it is deep value. So your point about the cash flow, maybe that's what he's attracted to. But it's funny, spinning from Sirius XM to cutting edge AI technology. It's such opposite ends of the spectrum. But I want to go to Nvidia now, which the stock has started to break out after it seemed like Nvidia, a lot of semi stocks, and a lot of the AI related companies were kind of consolidating like for a few months now, almost since maybe the last earnings season when Nvidia reported. And I'm wondering, with the newfound strength we're seeing, and they're kind of all beginning to break out of the ranges that they've been in, are we setting up for another wave of AI tech leadership here?
Yeah, I mean, I think it's interesting. I looked at Nvidia specifically, and I saw like a 68 net option sentiment. So I've been thinking about. I think it's one of those things that exemplifies what we're talking about, right? I think that like Jensen Wong saying they're like on back orders for Blackwells and everything. It's like you got to take him seriously, right? There's no reason not to at this point when he tells you they're like, they've got people jumping over each other to get these chips, that he's telling the truth, right? So I think there's that side of it, and then there's the other side of it where we're just talking about it right now, right? Where it's basically like, okay, like maybe that's also baked into the price, right? And we look at this and we look at these lower PEs, and that's where, or sorry, we look at these like high PEs and kind of lower net option sentiment, and that's where it gets really tough, right? Because I see both sides, right? I see like Nvidia just basically being able to ride like into this another great quarter, ride up and get momentum. But then I also see like potentially like a concerning story coming out, tensions with China, election tensions, worries about tariffs, right? That could send it spiraling in the other direction, right? And that's what's so tough at something about Nvidia. And like, Broadcom is always like what we call a safer one that we're more comfortable. And I looked at it today and it only had 85 net option sentiment and like not necessarily a good trend. And that's not normally the area at which we buy it, right? So there's this, okay, I think growth is going to continue. And we've always said, like, I think people are underestimating growth. And this will continue, and there's not really going to be a slowdown, and there's definitely not a bubble, right? But we've always said is it valued fairly, right? Within that, clear growth trajectory, who knows? And then also it's just like, even given those things, is it a good thing to bet on, right? Because maybe it goes up 5-10% more before earnings on like a choppy way up, right? But if a news event happens, it's down like 30%, right? And if you're going to hold through earnings and there's anything disappointing in earnings, you might lose 20%, or you might lose, 10 or 15% on top of what you gained rolling into earnings. And that's just what makes it so tough. But if we see net option sentiment, especially on, Broadcom, maybe LRCX, some of the ones that we think are less risky, we'll definitely get back in. But right now we're loving AppLovin. Even today we've held App. We've seen a nice gain on it. Even with Goldman downgrading them, it kind of was down in the morning and is now back up. So, no reason not to love App as our tech play right now.
So for my perspective as someone who sits across from you, twice a week, and we discuss all of these topics, so often, it seems like a pretty big shift I just heard there in your view on AI. Would it be fair for me to say, just like summarize what you said very shortly, the easy money has been made in AI and it's going to become a lot more difficult. The risk versus reward is not as one-sided as it's been.
I think it's just mostly around the election, right? And all of the tariffs that Trump is talking about, which would send waves through the chips industry, like in a variety of ways, right? Back and forth, right? We do a lot of importing and we do a lot of exporting of chips, and like I think net, like it might be good in terms of creating more industry in the US, but short term, it's going to have a bit, like that kind of thing has huge economic impacts. And like I even saw Fox News report on it and say the cost to the consumer, like in the everyday American, would be more than Harris's plan, which is kind of shocking, right? But it could have better long-term effects to like make sure I'm covering both sides of this fairly. But I think that's my biggest thing. I'm very bullish on AI, right? And I'm bullish on the AI results, right? But we always have to kind of separate, results and price action, right? And I'm very concerned around the price action around the election, and we're getting pretty close to it, right? And we're getting close enough that we could start to see people getting out of it because they're also worried, right? We always talk about that. Like on this kind of thing, right? It doesn't only happen if the second that Trump wins, right? We start to have people trade a little defensively go in the election in case he does.
And even though the market, we just celebrated the 2-year birthday of the bull market, it seems like this bull market has been a little different where everything hasn't rallied. There's a lot of areas and sectors and, small caps where they just haven't really had the same type of performance as the AI stocks and the mega cap stocks. And I want to turn now to, a smaller stock that had some news today. SoFi was up over 9% today after they reached a deal to use $2 billion of Fortress Investment Group funds for origination of personal loans. And SoFi being, a smaller cap company, I think 2 billion, that got people excited. Another stock that I think this could be affecting today is Upstart, which is very strong today. I think when I last looked at it, it was up over 14%. So it seems like maybe lending stocks are doing well today. You want to cover those companies, but then also just the point I made about how like there's a lot of sectors and areas that haven't seemed to have the same type of performance. Is that where you should be trying to find diamonds in the rough at this point?
Well, first of all, like you got to take these symbols and like Fortress is one of the smartest credit funds out there, right? And people are worried about personal finance, right? So Fortress being like, hey, I'm going to take a chunk of money in this is them basically saying, I'm not as worried about defaults as you might think, and some others would think, because they're priced in the market. So that's why you're seeing these reversals. And this is Prospero's new momentum score. Like Upstart appeared on it It's not something we typically cover. It is kind of like one of the better looking smaller caps that we saw, and it's a big win. We have it in our high conviction portfolio. It's up close to 20% today. And it's like interesting. It's actually at like, it's pushing the high for this year, for 2 years or whatever. But, before the pandemic, it was at close to 400 and it's trading at about 60 now, just to give people, a look at how much this stuff has changed. And like, yeah, the way people are valuing personal credit has been down. So yeah, I think that we're definitely looking at something here that could be a nice play, and we'll continue to hold it until we see a change. But like, yeah, SoFi, Upstart, all of these things, and we've talked about this before within banks. It's very hard to understand how to value an asset base that you don't know as well as they do internally. Like they can report certain things, but unless you really know the borrowers, right? And we don't really have access to that information, we don't really know well how to value this. And I cut my teeth for my first company modeling mortgages, right? So I know this very, very well, this industry. And it's just very hard to know how to value a company like Upstart without really understanding who their borrowers are, how to forecast their default rates based on things like their occupations, their current delinquencies, but when you see like a macro event like this, where you basically see a very smart credit fund saying, hey, I'm gonna put money into issuing new consumer loans, that is something that is someone that knows something, right? Fortress definitely analyzed SoFi's book of loans before that injection and saying they're comfortable with, how to forecast these default rates, and they're very well equipped to do that. Fortress is a pretty old, successful fund, a big fund. So I think that that's obviously something that, in lieu of that, right? I'm talking about all that, but you can count on Fortress to make a good bet on that. So I think that's why you're seeing a positive response overall.
Well, it sounds like that's a really good sign for the state of the consumer and the economy, right? If these lending companies and someone that's well respected like Fortress, like you're saying, has no fear, it sounds like that's what they're signaling. The consumer is very good.
Yeah, yeah. I mean, I think I think you might what you might be seeing is what we kind of started with, where Fortress is now kind of expecting a soft landing, right? And that's why, and maybe before they were pricing in some risk for some bigger job loss, and they're seeing that there's not going to be bigger job loss, and that's what's kind of cooling them off, right? That would be my guess, and kind of wanting to see how inflation stacked up versus unemployment, and it does those are looking like pretty good numbers, right? So I think there's a reason for that to happen. Obviously, I'm a little more concerned by some other macro forces. But at the end of the day, I imagine that's exactly what they're saying. I think they're saying that they're now, closer to predicting a soft landing than a recession.
So, since lending is affected by rates, do you think one of the areas that could have the highest potential upside is any of these small cap stocks that have been beaten down for years, whose businesses are affected positively by rates going lower? So some like real estate type companies, maybe obviously the lending ones we covered. Are there any other areas that are affected by rates, like where the business is highly dependent on that?
Yeah, I think if you're looking at small cap, you know, um, real estate, I think small, I think small cap financial services, I think are good like overall sectors to look at. But then you might have some consumer goods. You might see some small cap of like we've seen like Sweet Green doing very well, and we've like been in and out of it. I think anything around consumer discretionary, especially if you see that it's near its like 52-week lows, like those kinds of things could present great opportunities. Um, those are like, those are the first ones that come to mind, those sectors. But I would say more than anything, if you look at smaller cap ones that are near, 52-week lows, that that touch consumer spending at all, that touch credit, I think are things that you definitely want to look at.
And I think in a fairly similar line of thinking, but I want to spin now to crypto. Maybe some of these stocks are kind of uh, having similar type of reaction as this companies we were just mentioning, where they've been beaten down, and maybe it's time for them to just revert to the mean and move higher. Obviously, crypto. We don't talk about it too much on the streams, but Bitcoin is up over 2.5% today. It's been in this same type of AI consolidation type period where I think it hit its high in either March or April, and now it's just kind of been ranging slightly lower ever since. Um, what's your thoughts on crypto going into the end of the year? Obviously, we've talked about some stocks relating to Bitcoin like Mara, CLSK, Coinbase, MSTR. Um, are any of these things looking good to you heading into the end of the year with the election coming up?
Well, I think crypto is a good example of like what we're talking about, where it's like consumer spending adjacent, right? I think it's no secret that a lot of retail and everyday people like investing in crypto, right? So if you're forecasting something where everyday people are going to have more liquidity, whether through loans or just having job forecasts higher than you expected, then yeah, like that makes tons of sense um, to have something um, where you get that kind of exposure. And I think that's what we're seeing. You look at something I think like Upstart and something like Coinbase, kind of similarly in this, right? We're like better credit markets for everyday people, more liquidity, a better job situation is just going to create more money flowing into all of those, businesses.
Okay, and I see we've had over 1,100 people on the stream so far today. So thank you all for tuning in. Hopefully, our topics so far have provided some value for your investing. And if you would be so kind as to like the stream, no matter where you're watching it, that would be awesome. I'm about to bring up the last topic I have prepared for today. So we kind of flew through our topics. If anybody wants to comment any questions for us, we'd be happy to jump into those also. But this is something I wanted to bring up last stream, but we didn't get a chance to bring it up. But it was something I've been coming across on the Twitter finance area of Twitter. Elliott wave theory. I see all these people posting, these graphs of different stocks with their Elliott waves drawings on it. It seems to be a technical analysis of companies that you're able to do. I'm just wondering, what should I know? What should our viewers know about Elliott wave? Do you think it's useful? Just what are your thoughts, feelings about it?
So I've actually have retail investors talk to me about Elliott Wave a not insignificant number of times. And like what I say about any signal, right, is like, hey, if it provides value to you, you should use it. Um, but you should use it within the scope of other signals, right? That's by far the most important part of that, right? Because the big thing is if it worked all the time, right, there'd be hedge funds built on Elliott Wave, right? But I haven't heard of any hedge funds built on Elliott Wave, but maybe they use it as an input, right? So I think basically what you kind of see when you use like a single signal, right? You see it doing well. And like a lot of the times, I think the best thing that I can explain to people is like a lot of these formulas are linear formulas, right? A linear formula means you're basically like drawing a line of something to make it work. Regressions are linear, right? Non-linear formulas are things like a neural network because you don't know where the lines are connected or how. It's just solving a problem with like broad matrix multiplication where you don't have a lot of visibility to the lines that it's drawing. I say this because a lot of linear equations, a line is basically like, okay, in normal conditions, this works, right? So when you see a single variable like that working, what you're really seeing is that it works in quote unquote normal conditions, right? But fortunes are literally made and lost in abnormal conditions, right? So a lot of the times, all that's happening is that signal is giving you comfort in a regular market, and you'll end up losing money when it's in an irregular market. And you could end up losing more than you gained, depending on how you organize it. And I think that's the important thing. I can't tell you how many cycles I've gone through. And I saw this kind of shitty, grifty company that was like, that had like creators that like did very well in the bull market. And one of the creators just did horribly. And they all did horribly, like generally in the bear market. And I've seen that happen time and time again. Everybody looks smart in a bull market, right? The bear markets are the important things. And a lot of these people with their systems and things and that, you're just looking at them doing well in easy conditions where it's very easy to draw lines. But what you don't know is when the market is going to operate outside in that line. And a lot of the times you're going to lose a lot more than you gained when it operates outside of that line. So I've looked at it. Elliott Wave looks like a good signal, like especially if it's one of the signals you look at and you look at other things and you have a process that's not just like really reliant on this one thing. But I would challenge, I would always challenge you to, if you have back data, look at it in, prior situations. I just don't think I think you always have to come back to the idea of if it worked that well, hedge funds would be using it and they'd be using it faster than you could use it. And they'd be taking the juice out of that trade, right? So it can't work that well. There's reasons that they're not doing that and beating you into the trade, basically. And that's why we've built our signals the way that we've built them. Just because we follow where institutions are doing it in real time, right? So we're not dependent on any single equation. We're actually leveraging and counting on the fact that who we follow uses a lot of different equations, a lot of different approaches, and that's very different than relying on a signal equation where it just like logically does not make sense that it would work. Otherwise, institutions would be using it. They'd be taking the juice.
So just one follow-up to that. You talked about, how fortunes are made and lost on non-typical occurrences in the stock market. What are a few points that people could leave here today with that, would set them up well to be able to handle a non-typical situation in the stock market well? What are some things that you do that make you able to perform even in that type of an environment?
Well, I mean, I really rely on the Prospero signals, right? I will adjust my approach based on QQQ, SPY, net option sentiment, right? And then I will adjust my individual stocks on looking at things like beyond net option sentiment, upside, downside. Also, like looking for risk, avoiding stocks, as QQQ and SPY net option sentiment are going lower, avoiding stocks that have like higher dark pool rating, higher short pressure rating, right? I think all of that stuff is how you want to look at a good long-term strategy, right? And if QQQ net option sentiment is high and SPY net option sentiment is high, then you can get more aggressive, which with maybe having, we recommend profitability and growth be above 120, but in better times, maybe you can start looking at stocks that have higher growth and maybe lower profitability, right? But you want positive trends on upside breakout, ideally trends going downward and downside breakout. A lot of these things are very important in kind of forming your strategy on the whole using Prospero signals. But then you also want to look around, right? You want to look at other signals. You want to look at things like, PE ratio relative to other companies to give you just like a base value assessment. Like, I think all of this stuff is very, very important, and including, understanding, whether it be QQQ, SPY, net option sentiment, which is very reliable, at least for me, to know when I should be risk on, risk off. But, you also need to really understand other macro forces. And you need to be reading things like, The Economist, the Wall Street Journal, to name a few that give you a good sense of like how people are feeling about the general macro economy as additional sources. And I mean, it always helps like to have I would say other sources that you use in terms of, I always look at what Buffett's investing in, and I always look at, kind of what's doing well in institutional flow and where things are flowing in well like that. So I think what I'm basically saying is, and a lot of this is just basically work that I do in terms of reading, macro sources and talking to people that I know. So you can't necessarily duplicate that, but you do need to have a variety of signals. And if you're looking at something like Elliott Wave and you're just making decisions purely based on that, you're doing it wrong.
I think the only other thing I was thinking about was like the sizing of positions, because in the model portfolio, you know, even if you're all in on a stock, like you love it, you what do you have, like 3 or 4 positions open, which in a portfolio that has dozens of positions, um,
Yeah,
you're
sometimes as much
never
as 100.
yeah, you're never actually like all in. Like I feel like some people don't understand, like they love a stock, they fall in love with it, and then it becomes 50% of their portfolio, and then that stock goes down, and it's like, well, the risk, the positioning. How do you can you speak to that a little bit?
Yeah, I mean, generally I try to keep the high conviction picks at about 10, right? And I think that's a good methodology where it's like I wouldn't really recommend having anything be more than 10% of your portfolio unless you have a strong, you know, signal reason and macro reason, right? Like I think we're about to release our 9-month review, and one of the things I talk about it is ASTS, and that being one of our biggest things, right? And we had good signals that we were excited about in that, but we also had a view going into their conference call that the only thing we were worried about was their launch being delayed. And when we heard confirmed from management that their launch wasn't going to be delayed, we instantly picked up 3 positions in that, right? And that's because we had a good degree of confidence in the signals. And then we also had a good handle on where the company was qualitatively. And we had a view on how to capitalize on that. And you need to have both of those things before you become high conviction. Otherwise, we kind of are very signal driven and are kind of like hold close to equal conviction in all our positions. And we try to diversify, which is generally a good practice.
Yes, I agree, and I think there was a lot of value shared in the last couple of minutes. But if we don't get any questions, I think time to switch over to do the model portfolio update. All right, I
We
see
will
George.
switch. All right.
Yep, nodding ahead. So we'll see George on the other side in the Prospero.Ai laboratory. All of our viewers, all 1,200 of you, stick with me for a moment as we do the switchover. In this time, I'm going to update you on what the Prospero app is showing for the SPY and the QQQ. Uh, Even after the markets have opened up so strongly today, and actually it looks like they've gone up slightly as we've been streaming. Specifically, the Russell looks like it's catching up to the QQQ and the SPY. Maybe it'll actually finish the day as the leader. It's less than 0.1% behind them now on the daily gains. So that'll be interesting to watch throughout the day. But let's take a look and see if the net option sentiment has also stayed high. All right, I'm first going to open QQQ. By the way, did any of you check out? I mentioned if we have also some new people in here at the beginning of the stream, the update in the Prospero app. If you haven't noticed it, you can open up your app. There's a new animation when you click on a stock. The charts kind of load in. Let me know in the comments, what do you think of that right now? Do you like the new update? Do you not like the new update? Or do you like the new update? All right, so I have the QQQ open up, and net option sentiment has gone down slightly. It's at 60. At the beginning of the stream, it was at 62. So still up towards the highs. The highest it's been in the last 2 weeks is 63. The lowest it's been is 49. And when you look at the time series graph for the QQQ, it's a clear uptrend. So I wouldn't say it's bearish just yet, but it has slightly gone down since we started the stream. And I'm going to pull open this SPY, which is at 45, and I believe it was at 46 when we started. So also down 1 point. And when you look at the time series graph for the SPY, it's a little less clear than the QQQ, where the QQQ is just, straight up and to the right over the time series graph. There's a little more volatility in the SPY, up and down, and obviously it's at a lower level overall. But
what do we have there?
so for the QQQ, we are now at 60, and the SPY we are at 45.
That's like where we've been.
Yep, the SPY just continues to lag the QQQ a bit in that option sentiment. It'll be interesting to see what's the next. I mean, it can only come a little bit closer together. I've never seen it be like 20 points apart. Have you?
Yeah, I've seen it be 40 points apart. Okay.
Oh, okay.
Gotta get the.
Okay, we are way more long than short right now. So this market is performing as expected, and we will essentially look to be selective in our adds and drops around our general bullish strategy. Energy starts off poorly again, two up and down for us. Industrials and technology are the only ones with 3 green shades, so it should be no surprise that our portfolio is weighted towards those industries, sectors. Scratch that. Large cap growth is back to being the best looking pick in our portfolio is weighted towards that already, so no need to revise that view much.
Okay. Oops. Now we got that. One. Great. There we go. Upstart. Oh, that's interesting. After being near the bottom. Last week, Dow Jones is now back near the top. I don't know if I want to take another upstart the way that this thing's been moving. Okay, what do we got? Do we have an open RSG? I don't know if we did that.
RSG loading. It is closed.
We don't have an open RSG.
No.
Goldman Sachs, all right. Let's see what we got here. What's TVX? Oops. All right. How are we going to get this done? I don't know. I think it's going to be a little tight for 12:10, but we are going to try. And there's Siri looking very good in momentum score. So that's interesting off our earlier story.
I was thinking that about coin and Siri. It's funny that those are both looking good.
All right, now let's look at this. Is this 1201? Yes. Damn. That is a decent number of exits. I think we're going to have to make sure we get out of some longs too. I'm getting a little picky, but I don't necessarily want to become too overweight. All right, I think that's good. Might as well. While we're here, we're going to take a look at just what's in our current portfolio. I think everything's good here. Yeah, if anything, meta is. Everything's good there. All right, 1209. We're going to take a quick scan, and I think we should be good to get it out at 1210. Paywall there. Everything's good on that. I'm going to send it out at 1210. All right, any other questions?
There are no other questions for us today.
All right.
We'll wrap it there. We'll see everybody back here Wednesday at 3 p.m. Tune in then. We'll give another update on everything happening in the market. But
Thanks,
see you guys then.